Salam everybody, this is Investor Shake back at it again with another video. And today's halal stock pick of the week is YETI Holdings, ticker symbol YETI. Stock price is at $37.13. And the key stats are: it has a $3.2 billion market cap, no dividend, a 52-week low of $38.01, which is where it's at right now, and a high of $108.82. Pretty wide range there. PE ratio is 16.61, which is pretty fair, and the earnings per share is $2.24. Now, I have covered this stock in a previous video where I went in depth about the company, and for reference, this is a global designer, retailer, and distributor of innovative outdoor products, from coolers and drinkware to backpacks and bags. And I have this picture of all the YETI products that represent the YETI brand. You have the hard cooler down here, and you have a variety of tumbler bottles and thermos, which they call the Rambler. On the left right here, you have another cooler which has a strap for you to carry. And all of these have vacuum seal technology that allows it to retain the ice cold temperature for long periods of time. So this is a great product to use when you're going on an outdoors trip, you're going camping, or you're having a party. These will keep your drinks cold all day long because of the technology that's built into these products. And over the years, they've really grown to become a well-known brand. The YETI brand is starting to become pretty mainstream, and they're opening a variety of stores all over the country. I've been to one of the YETI stores, and it was a great experience. The ambience was great, the staff was great, and the products came in a variety of colors, which I thought was pretty interesting. And the reason why I want to talk about this stock is because the last time I covered it, it was in the $80 range. And YETI has not had a good year. Just like Adidas stock that I talked about last week, YETI has had a terrible year. It's down 2.5% today, down 26% in the past month, down 39% in the past 6 months, and down 63% in the past year. When I first covered this stock, it was in the 80s range, around the $86, $87 range. And since then, it did go up to all-time highs, as high as $108. And ever since October 25th of 2021, the stock has had a downward trajectory that's lasting up to this day. So from $108 down to $37, it does sting, especially if you did buy near the high. And no, I did feel kind of angry because I did sell some shares, but I still held a majority of my position to this day. And this does pose as a good buying opportunity if you are someone that is bullish on YETI stock. The stock is at the 52-week low, but there is no guarantee that the stock will rebound after this point. It's possible that it could go as low as $30 or $20 based on the trajectory of the market as a whole. And that's one thing to keep in mind. Like you think you may get a good deal buying it at $37, but what if it goes down to $25? But if you're bullish in the long term, this would be a good opportunity to dollar cost average if you have a pretty high cost basis, if you've held on to this position before. Now, the reason why the company's stock price has been declining for so long is a multitude of factors. It could be based on the entire stock market itself, or it could be company specific issues. And this article says YETI's revenue is increasing but challenges taper profits. Let's see here. Well, I'm not gonna check the article, but then another article says YETI stock tumbles, sales offset by rising operating costs. So the rising operating costs is one issue that's affecting the company in the short term. And looking at the financials, come on. All right. So you see here, year after year, the company has had increasing revenue as well as increasing earnings. So we're seeing a pattern here, and it's a good pattern. So this is good for a growth company. And quarterly, it's up and down, pretty stable. But as we see here, positive earnings, positive revenue for all from Q4 2021 up until Q3 2022. In Q3 2022 had a big increase in both the revenue and earnings from the previous quarter. So that quarterly boost is a good sign. Then going back to the financials, the company is profitable. $197 million in net income. This is really good coming from a growth company. This is now a positive net income is expected from blue chip companies and companies that have been well established for decades. But to see a company that's growing like YETI posting positive net income is a really good sign. And then the balance sheet, they have $1 billion in assets and $548 million in liabilities. So the assets outnumber the liabilities, which is another good sign. And then their current debt is at $22.5 million. And their long-term debt is at $95 million. So that is quite minimal when you compare it to its $3.2 billion market cap, which is the main reason why it is deemed Sharia compliant based on their debt. So they're not having too much debt, which is really good for a company like YETI. Now, all in all, the financials do look good, and the company's brand is growing. So this company does have a good outlook in the future. It's just that they are experiencing short-term issues in the operating part of the company. And supply chain issues could also play a part in this. Obviously, including the bear market that we're experiencing right now, that is a major factor in the stock price's decline. I mean, we've seen this stock break the $100 barrier last year, but there is a possibility that this stock could return to the $100 level, just not in the near future. Depends on how this company performs in the next few years and when exactly this bear market will end. Because right now I believe we're still in a bear market. But in the meantime, if you are bullish in this company, this would be a good buying opportunity. And if the stock does continue to decline in the next coming months, you can just continue to dollar cost average. Now, keep in mind, this is not financial advice. This video is for entertainment and educational purposes only. Please do not financially involve yourself in YETI stock simply because I'm talking about it. This is Investor Sheikh checking out.